This is the Best Stocks to Buy podcast. Looking for quality stock tips? Well, we bring you timely investment ideas based on the latest stock and market outlooks. Our ideas are driven by a proprietary software that reviews, analyzes, and ranks over 6,000 stocks every week. So you may hear the name of a company you haven't heard of before. And you know what? That is often the best kind of opportunity. An opportunity to get in early before the investing masses. The Best Stocks to Buy podcast is made possible by Conner Management Group, a registered investment management firm serving individuals, business owners, and family offices. Hello, everyone. This is Mathis Conner with Conner Management Group, and this is the Best Stocks to Buy podcast. Today is Wednesday, January 17th, 2018, and this week we'll be looking at the best growth stock to buy right now. Here on the opening slide, it's called the setup and the approach. The key objective of this podcast is to present to you a high probability upside potential stock. The key tool we use is a financial model, a proprietary tool we developed that uses multiple valuation approaches across over 6,000 stocks every week. So the view you're getting is not driven by some sensational headline in some popular publication focused on increasing readership, but simply on the best investment opportunity. An easy way of thinking about our approach is to think of the method of triangulation that law enforcement uses to locate a cell phone. In our case, we use a form of triangulation to locate a future stock price using different valuation methods. The backdrop. Now, I truly viewed creating such a model as daunting, but I believed I was well prepared for the challenge. I have both computer programming experience as an engineer and over $15 billion of transaction experience as a finance and development guy to judge the research we review. So my approach didn't come overnight. I painstakingly reviewed over 40 years of white papers, taking away the best that each had to offer, and then added some of my own tested intuition to implement new data sets that weren't available as little as 10 years ago. Further, my model uses both historical and projected values and takes into account management's historical accuracy of meeting the projections that they share with the public. Now, a point worth remembering is that these are views based on today. An unforeseen economic report, a regional conflict, or a revised policy can change these expectations tomorrow. Benefit of using a professional manager like Conner Management Group is having someone experienced in making educated assessments about the uncontrollable, as well as having someone to readily share their opinion about whether a particular event is reason for concern. And now, so what did our model find for you this week? We found that the best growth stock to buy right now is in the telecom equipment industry. Telecom equipment industry is composed of companies that include hardware and software-based products in the telecommunications industry. Just to level set, here are the 10 largest competitors by market capitalization. W.W. Grainger, HD Supply Holdings, NCR Corporation, Herman Miller, Pitney Bowes, Verifone Systems, H&I Corporation, Diebold Nixdorf, Steelcase, and Knoll. The growth drivers in this industry are flexible software-driven solutions, merger and acquisition activity, and wireless 5G solution activity. Industry challenges are companies evaluating mergers and acquisition opportunities to drive growth amid increasing competition and increasing competition among point-of-sale companies, new companies like Square, Shopify, and PayPal. And now for the big reveal. The best growth stock to buy right now is a company called Verifone Systems. The ticker symbol is PAY, and we see the 6-month upside potential at 28%. On to the quick facts slide. Verifone Systems provides payments and commerce solutions at the point of sale worldwide. It offers countertop solutions that accept payment options, including contactless, NFC, mobile wallets, and EMV. PIN pads that support credit and debit card, EBT, EMV, and other PIN-based transactions. So you can think of this as a company that provides a lot of those hardware payment devices you'll see in the supermarket and retail stores. The website is www.verifone, that's verifone.com. Verifone Systems is headquartered in San Jose, California. They were founded in 1981, and they have 5,600 employees. On to the metrics slide. The annual revenue over the last 12 months for Verifone was $1.9 billion. They're large, but not huge. The net income of the last 12 months was $713 million, and the cash from operations was $166 million. The operating margins for 2017 were 16%, and for 2018 they expect to be slightly better at 17%. On to valuation metrics. Trailing PE ratio stands at 9.0. The forward PE ratio stands at 8.0. That relationship implies that earnings are expected to increase. The PEG ratio is at 1.3. The price to sales ratio is at 1.1. The price to book ratio is at 2.7. And the enterprise value to EBITDA ratio stands at 12.4. The dividend yield is 0%. Verifone does not pay a dividend. And similarly, the dividend payout ratio stands at 0%. The next chart is a price chart of Verifone Systems over the past 12 months. The stock has ranged from as low as about $17.25 to as high as about $21.50. The stock's high was in September of 2017, whereby the next 2 months it had a sharp pullback down to the $17.50 level. And basically the pullback was due to evidence of increasing competition. The next slide is called Looking Back and Looking Forward. Looking back, Verifone at one point had an installation bottleneck for its products, which has since subsided. Gas station owners still have until October 2020 to upgrade their payment systems before becoming liable for some fraudulent transactions, which continues to create pressure on payment system upgrades. Several major competitors are exploring merger opportunities. So that's looking back. Looking forward, the company is rolling out new payment products throughout several countries. There's growing pressure on U.S. merchants to upgrade to chip card readers to drive growth for new point-of-sale products. And as already mentioned, there's some concern about new point-of-sale competitors like Square and Clover. The next slide is titled Why Now? The Bull Rationale. We see this as a good investment opportunity because of an expected increase in sales per share over the next year. Right now, the company has pretty low valuation metrics, and it's expected to have even lower valuation metrics in the near future. A summary slide. The financial statement quality we consider to be good. The operating margin trend is expected to be flat, although we notice it to increase just ever so slightly over the next year. The price pattern trend is volatile. There was a strong pullback from September of last year until now. Industry outlook we view as flat. While there is growing demand for upgraded payment systems, we see this offset by increasing competition. So our overall market outlook is positive as a result. The recent closing price for Verifone was $18.17, and we see our 6-month price target as $23.51 to give this company a 6-month upside potential of 28%. So it's for all these reasons that we believe that Verifone Systems is the best growth stock to buy right now. We hope you found this presentation helpful, and we'll talk to you again soon. Take care.
Hello everyone, this broadcast was made by Connor Management Group. We are a registered investment advisor and money manager for individuals, businesses, and family offices. We are not your typical financial advisor in that we invest our clients' funds directly into individual stock positions. We do not put our clients into other stock mutual funds. At Connor Management Group, we help you grow and protect your assets. We craft high growth investment portfolios for your children and other minors. We manage the rolled over assets from 401k accounts. We manage IRA and trust accounts. So how do we go about serving our clients? One big differentiator is that we develop some pretty comprehensive computer software that reviews, analyzes, and ranks over 6,000 stocks on a weekly basis. And from that, we create concentrated investment portfolios of well-researched and closely watched stocks. Furthermore, we operate under a managed account arrangement, and that means you open and fund a brokerage account in your name, and we simply manage your investments electronically. That gives you, our client, the greatest control and transparency possible. You can learn more about our service at www.connormg.com. Additionally, we've set up a group on the LinkedIn platform. The name of our group is simply called Stock Investing Tips, Better Returns, Bigger Pockets. Now this is a private group, which means you have to click the Ask to Join link. We do this because we want to be able to control the quality of the member experience. So if you like what you heard and would like to receive more timely investment information and be able to post questions, just send me a message to Ask to Join our LinkedIn group. You can readily find my profile on LinkedIn. It's Mathis Connor. That's MATHISCONNER. And if you have any problems connecting, just send me an email at mathis@connormg.com. Well, that's all for now, and I'll talk to you in our next broadcast, or hopefully with you in our LinkedIn group. All right, everyone, have a great week.